Good morning, everyone. All right. So, one jobless claim number out. Market bounced up a little bit from that. But so, market gotten a little momentum going over the last couple of days from this chop that we've been seeing. And so now I think, look, in this market, it's been a little treacherous to say the least. Intraday and from time to time, almost as if these moves to the downside have been manipulated. It's just amazing how they fall so fast and buyers are just sitting there. Maybe they become trained over these last couple of months to do that. At some point, it'll come to an end. Now, it happens in both ways. I mean, I've seen it over the years. And it becomes a bit of a surprise when it does because you kind of, we operate in the markets almost like, the Pavlov's dog theory is the market will train us to react a certain way to what goes on. And then all of a sudden things change. Um, but we'll see. But one of the things I wanted to point out was the fact that this momentum, not that it picked up drastically, but compared to what has been, and just pointing it out here, make it easy to see. Clearly, there was a bit of momentum right here, right off of the low. Right, that's a good thing. After retesting this high, it suggests prices can go higher. And then we had this corrective price action with the red bars ignored and buying on the dips and pulling back to minor support and so on. So choppy price action again, and then kind of like a grind. And if you remember over here is where I spoke about what's going on here. We had this resting period, red bars ignored, topping tails ignored, and the market can't pick up some real momentum. And then when it picked up a little bit of momentum, remember, I guess I'm looking at this, I guess it was almost 2 weeks ago, that Thursday where we had the bear market intraday move to the downside. If you go back and look at the 5-minute charts, it was just this steady flow and relentless selling, obviously within the context of an uptrend on the daily time frame. And there was this follow through, and then again, this stall and chop. So, last week we had those nasty dips that came all the way back, pretty incredible. I remember this when this was trading down here and below the opening price. I thought to myself, I think I even mentioned in the green room that I haven't seen in the past a wide range bar like this come back to get above the open, and it did it. So it's just been an amazing market environment of differences from the past and things that are unusual, just like this virus issue, unusual of having such a tremendous drop like this and then just to stall and reverse back up again. So at this point, we see the momentum's picked up again, right? And not in a great way, but we can see higher high, higher low bars as prices are coming into the unfilled gap area, and it's still got a little room to the prior high. But as momentum picks up within an uptrend, it tends to make us feel safe, because now all of a sudden the erratic price action ceases a bit and follow through occurs. And you got to be careful about becoming a little complacent because as things look good, many times you're close to some type of corrective price action. And this market has just been one in which there's been lots of little corrective price action along the way. And so now you can see this morning, it's early in the day, of course, and we've got this slowing momentum candle where the open and close is virtually the same. The candlestick book. Here we just look at that as slowing momentum, and whether it's got a bottoming tail on it or it's been moving up and it's got a narrow range, it still tells you that momentum is slowing because we see the small candle bodies. So we'll see where this ends up today, whether it's a red bar or a green bar, it follows through higher. But looking at the NASDAQ futures, And this, as you can see, as a much stronger move of increasing momentum. And then that was just followed by this corrective sideways price action. So, just keeping in mind as things begin to pick up that momentum and things look a little bit more certain, that it can lead, and typically does lead, to some type of corrective price action. And corrective price action, as you can see, doesn't have to mean a collapse or a break in the trend. It can mean sideways price action. Here was just wild and whippy type of sideways price action. And now, you can see large bars and ranges and tails, and now things are tightening up again. We'll see how it unfolds. This is at new all-time highs. It's had a hell of a run. And, obviously now we're into August, and next week will be obviously starting the second week. So the end of month phenomenon of markets historically being bullish, it doesn't happen all the time. End of month, beginning of the month, money's coming in to funds. It'll be over. And as we get into the middle of the month, one of the things we'll be looking for, which we've been talking about for quite a long time, is whether we get our internals, which you can see the flip up here from this increase in momentum on the spiders. And look at the narrow range day, like a gap, and it just churned all day. But as this, say today, gets some additional move to the upside, and this pushes up into this bearish area, we're going to get a sell signal from our internals. We're going to be in the middle of the month. August, historically, if you go back and look at the years, it's often been a turning point and not necessarily a high turning point. I remember years back where the market was correcting and it was a bottom. So just something to keep in mind as this market has had this grind as we come into the middle of the month, August. For our market internals, finally, breath pushes up where we've been looking for the junk, so to speak, the dogs, the underperformers, to play some catch up. That will see some larger corrective price action, and some maybe lower rather than sideways. Excuse me. All right, YM picking up in momentum. It's made this peekaboo above the highs. Wide range bar. You can see right to the left there what it's up against, but it's got plenty of room to pop. Now, what we'll be looking for next week is whether we still got today and tomorrow to finish the week, but at this high here, does it push through? And it's had this resting period. Right? You see these two bars here, which is here. So when we see some prices rest where it's close to resistance and it doesn't break down, and here it pulled back to this support, and there's those bottoming tail bars. All of that communicates to us that buyers are stepping up, and that's bullish. So because it already had this resting period, right, we look at price patterns and historically what happens and what that suggests. And what that suggests is that this should be able to push through here. Now, maybe this being the laggard and bringing up the rear, it is able to do that, but it doesn't mean we're going to totally discount what's to the left. People always ask, well, how far to the left do I look? Right? Well, until you see something, but the closer it is to current price action, the more I'll say, respect it. That being said, this has tested this partially, right, over here multiple times. So our interpretation of reading that price action is that to some extent it's weakened this as a reference point. Now, as we get a little sideways action here, right, at this new resistance, continue to be bullish price action, that again begins to support the idea that this can continue to move higher. And what is lagged, begins to outperform, whereas, technology, which is still participating, it doesn't have to break down, but begins to underperform. And that's called rotation, right? where, whether you call it rotation, call it playing catch up, what have you, it's money that moves into what is underperformed to the laggards and some money being taken out of the winners. A great example of that is the Russell, right, which is playing some catch up here. Notice how it's cleared the highs, and it had this wider range bar, and it's pushed up above the highs, and it's got plenty of room to go higher. Doesn't mean it will get all the way up there, but at least it's opened up the door to that possibility. And again, you can see the sideways price action resting at resistance, which is this mess over here. And that suggests that it's supposed to keep going. So look, we monitor this on an ongoing basis. It made a new high. This is now minor support. This is now major support. There's a wide range bar, obviously. It's supposed to stay, ideally, in the upper part of the wide range bar, but if it pulls back, right, which it really shouldn't, since it's had this resting period, it should only pull back to around here, and buyers should be willing to step up again, step by step. So this is now moving higher. Our hourly chart, it's got a little bit of correction here, but still uptrend. Weekly has broken resistance. All of this suggesting this should continue to move up. And this participating in the upside, Dow stocks participating in the upside, is what is going to move that market internal breadth gauge into a bearish area. And at that time, the junk may still continue to outperform. It doesn't have to mean that the market is going to have a serious decline. That's not why we look at that, but it just tells us that risk for longs is increasing. And sure, there may be a larger correction, but the junk may still continue to outperform. All right, bonds just chopping around at this resistance here. And we've seen this grind to the upside. Crude oil had that move after this downside shakeout. Some sellers up there, but the weekly has cleared these highs. So what we don't want to see is this bar, right, by the end of the day tomorrow, turn into a topping tail red bar. We want to see it hold on to the strength, another resting period. So when prices clear the highs, you want to see buyers continue to step up. They stepped up here, they should continue to step up. Gold just continues to soar. It got a little extended here, but it got extended coming out of a base. So it's been able to continue to move up, and it's still bullish. New all-time highs there, from what we can see right there. So bull market, money flowing in from the government, which doesn't seem like it's going to stop anytime soon. And so gold continues to push up. Silver looks great. And so as you see things get further and further away from price support, right, this corrected sideways, which was bullish, and now it's even further away now from this price support. And it may need to hit at $30, right? A whole number. Whole numbers a lot of times come into focus as a reference point to sell into. So maybe this pushing up toward $30 is where it stalls and has a little bit of a downward correction where buyers will just step up again. And we just do this and say, well, that's the breakout. And if it pulls back from 30 down into this area, that's where buyers should step up again. And that's what we call our factory work of just following the trend, minor support, major support, patterns, voids, and so on. So we'll see what today brings, and trade the plan. All yours, Dan.
All right, good morning, everyone. Yeah, I was just watching Kramer there, and the conversation with the House Speaker. The whole mess continues, the saga, as we've been talking about with this pending bill and the politics. It's So frustrating. But will somebody tell me when Greg's friend Pelosi comes on? Kramer's going to interview her. I want to watch that for a few minutes.
No worries, Dan. I'll capture a couple of pictures for you to put in your family album.
And you have champagne and popcorn when she's on, right?
Absolutely.
All right. So tell me when she's on. All right, let's go. We got our only of our opens, our only problem child today is T-Wow. Look, that was a beautiful 1, 2, 3, which shorter than that of the money put spread, and it's gapping down. I shouldn't have done that. So move stop 30-minute low. Amazon's gapping down a little bit here, but we only have a third lot left. And that little gap down with a $3,000 stock is really nothing. Our stop is under this wide range bar to lock in profits. So that's it. Everything else is fine. If you have any questions, ask me about opens. Yeah, what went on, Jake, is also, I've been saying this over and over and over again, expect market positive or negative moves as are going to be affected by the stimulus bill that we've been just talking about. And so the strength, when things were rallying yesterday, and then after market also, here, look at post market. Look at that. Rallied into the close and then zoomed some more. That, I can't give you a percent, but substantial percent because of the congressional talk on giving them more money. So yeah, let's scan the whole sector today, Jake. And I mean, it looks definitely, it's a breakdown failure. Definitely looks like a put spread. Could this be a long-term bottom? It could, of course it could. We talked about some of these beat up things yesterday. It's still in a downtrend, LUV. We're looking at the beat up airlines, cruise ships. I said the same thing. So look, this actually could be the same of the cause of the gap down, meaning, and I'm just speculating here, but the airlines are holding their strength pre-market and the cruise ships are gapping down. So maybe they just went up in sympathy. And now the reality is setting in of, oh no, we aren't going to get the money that we thought from Congress. So, that's part of the reality, but it's also part of the chart analysis. People were asking me 2 days ago, oh, CCL's cheap. Should I just buy it here? I'm like, do whatever you want. But is that an all-time low? I have zero idea. It's in a nasty downtrend, daily, weekly, monthly. So I don't know, but we're technical traders. So we have to wait for a pattern. We were saying the same thing with Boeing. I was saying it all day yesterday. Sure, it looks like a great day trade. Look at it. It gapped up, got its sea legs, took out the 30-minute high, bullish consolidation, price void. I said, sure, go for it. But for a swing trade, it's in a downtrend with no pattern. I don't know. John Williams is asking about Facebook. No, I didn't. We're still in Facebook call spread. I've tightened the stop, but it's still we're in trail mode. JR is asking about Livgo. Nasty bearish engulfing, gap and crap. This was on our list yesterday as a gap and crap. Notice pre-market yesterday, it had a high of 165. So had this gapped up to 165, that would have been a beautiful gap and crap. But it kind of sold off into the open and then got slammed, really gave us no entry. Today it's gapping up into the bar. It could definitely set up for a day trade, sure. You're swimming upstream on this ugly daily, but sure, you can keep an eye on it for a day trade. All right, let me go to gappers here. I got a ton of them. A beam, nice reversal bar yesterday, gapping up to 25. So gap's too big for me. I'm just taking that right off the list. Got no interest. 1435. That gap's too big for me. I'll come back to them. Remember, I'm just looking for tier 1 setups right now. Ribbon. Now look at this. This was a fair. Well, no, that's not true. It's not an IPO. But I've never heard of this stock. Ribbon. Gapping up to 520. You know, no immediate pattern, but you can keep an eye on it on a pullback. BHC. Hey, William, your drop down. BHC gapping up to 22. See, I call a gap too big when it's gapping off my daily chart. I mean, look, these prior highs 2050, and now it's $1.50 higher than that, and I got to go here to the weekly. It is a bullish breakout, and it does have room. So that's worth keeping on my watch list. And maybe it takes a week to set up and build a higher range base. So it's a big gap. Remember yesterday, MT Live, we was on trading gaps. And this one's too big for me to trade the daily. But I love it on the weekly, and that's what's telling me to keep it on my list to see how it sets up. William asking about WDC. Yeah, that's a very bearish gap under, look at 1, 2, 3, 4, under 4 major support pivots. So now we just got to see how it sets up. So this one's actually a big gap that's bearish, that if it can't bounce, then yes, it's a candidate to short. But remember our talk yesterday? You got to put it in a window. I'm going to put it in a 5-minute window, and let's see what it does. So step 1 passes. It's a bearish gap. Step 2, let's keep an eye on it. Jake Etsy is gapping down to 130. So that could be a day trade short. Elf, I can't tell where you're gapping. We'll come back to you later. Plug. Carl, I was about to post that as a core long yesterday. You got a beautiful buy setup on the weekly, bottoming tail, clean bars coming in. Your reversal on the daily, monthly. Look at this monthly. That's why I wanted to give it as a core. Target, $20. But it had earnings, so I didn't post it. But it's on my list. It's definitely worth watching. It looks great. Yeah, and I was even tempted to give it as a core anyway into earnings, but I like doing that with covered calls, and the premiums were not juicy enough for me. McGraw, Elf Cousins, Ulta. It's a bottoming pattern, but McGraw put spread over yesterday's high on Ulta is fine. SPH, it's in a downtrend. I got no pattern on that one, but Ulta put spread over the high. Khalid, GRWG. No, there's no adjustment yet. The stop is today's Thursday. The stop is Tuesday's low on GRWG. I'm noticing Lulu, I had on my other computer, has a beautiful breakout. We saw into the close. And now look, that's a nice gap breakout. So that looks fantastic. I got it on my other screen, but that's a tier 1 gap right there, folks. I got beautiful daily, bullish weekly. This is what we call an end of day base. Rallied in the morning, consolidating in the upper part of the majority of the day. Now gapping just over it. That is a muy bueno bullish gap right there. Relative strength to the flat market. So that, again, looks great. Let me continue. Yeah, McGraw, just keep an eye on Ulta and tell me. He can be very spreading. This guy gapping down 128 and change. That could be a day trade short. And also a call spread over yesterday's high. Visto, gap's too big for me. I got no interest in that. Com, 11 bucks. Also, it's gapping to my target. And it's climactic sell setup. That, well, actually keep that on your short watch. That's a big gap, extended into the open. So the odds of that profit taken at the open, gap in here, are very high to me. Roku, bearish gap on earnings. No great pattern. We'll keep an eye on it. So back to WDC. See, it's a bearish pre-market. So aggressive traders can short a 5-minute low. I personally don't recommend. I mean, it's how aggressive you want to be. We talked about this in MT Live. Do you want to trade? Do you want to trade a 1-minute chart? I mean, the risk and reward go hand in hand, but it looks lower. It's just earnings stocks that can be violent at the open. Me personally, I'd rather do a 5-minute low and share size it for that. But it's a bearish pre-market too. Look, it tried to bounce there, got slammed, tried to bounce there, got slammed. So this is a fantastic example, in my opinion, of a huge percent gap, which is still tradable. Do y'all see the difference? All right, let's still keep an eye on Lulu. Oh, look at this IPO yesterday. I missed. Big C, I saw him go buying the ticker today, and I never heard of him. Wow. All right, there's no pattern, of course, because that's a big old gap. But Big C, Jason Zinga. Yeah, I'm not interested in buying big gaps. Let's see it's near the resistance area. You are getting a little 180 reversal here on the 5-minute chart. It's not a no-brainer, but you know, looks fine. Yeah, I like this over the high. IPR. Is this one of those marijuana things? I would prefer, oh, see, there was no volume. I would prefer a 30-minute high just to make sure that it holds, but you know, the stock doesn't care about us. So it's up to you on how aggressive to get in. Initial stop yesterday's low. But it looks good. Look at WDC bottom right here, still. Oh yeah, Solo's the competitor. Not Solo, YOLO. YOLO is the competitor for Michael Jackson. They're both the stocks, and yeah, IIPR